Hey guys, hello and welcome to Moneycontrol. I'm Manisha Gupta and we are putting full focus on crude oil prices right now. Even as it's the fag end of the year, perhaps just another couple of days to trade, the participation, volumes, all of that seems to be declining, but the prices are still alive. And we have seen $80 a barrel hold for the WTI prices, and Brent has been meandering around that $84 to $85 per barrel mark. Well, there are 3 or 4 reasons that you have seen support continue in case of crude. One clearly is because of China, which is talking about ending quarantine for the inbound travelers from 8th of January. That clearly is a big one because China is the top importer of crude oil and the second largest consumer in the world as well. So this would mean that you will see jet fuel and travel fuel, all of that demand actually start to gain up. The second reason is the Russia, which says that they are going to curb production or exports to countries who are participating in the G7 price cap in that sense. So nearly 5 to 7% of output from Russia could be curbed in the first quarter of 2023, and that is having its premium into the prices as well. The third thing is about the cold winter and the weakness in US dollar index that has been supportive as well. And the only reason that the crude prices have not run up and away is that there are reports of moderate weather in the month of January, and the US refineries, which had shut because of the storm or the blizzard, have started to resume operations somehow, and that is keeping the prices in check. For the year, if you look at the WTI crude prices, they have gained up by 6%, and the Brent is up by 8.5% as well. Quite sharply lower from the kind of highs that we have seen in this year for crude. Remember, we've seen Brent touch a high of $139, a low of 75, but we are trading at $85 a barrel right now. So some bit of a rebound in the last quarter is what we are treating ourselves with. If you look at the forecast, then the expectations are that you could be looking at higher crude oil prices. Citi is the only one which is forecasting $65 a barrel for crude because they do not expect a very strong demand from here on to come. They also are factoring in a recession and a slowdown in the second half of 2023. So they say that 65 to 70 is what they are looking at in sense of crude prices on the weaker side. You have Fitch also talking about 95, so is the case with Wood Mackenzie as well. But $100 per barrel is a full possibility as per UBS, Bank of America, Goldman Sachs and Morgan Stanley, who believe that the second half of the next year could be looking at demand coming strongly. The US Fed rate hike would have been done by then, and it would not exactly dovish as a statement, but you will see the global central banks more or less done with the rate hikes, and that would be status quo by third or fourth quarter of the next year, and that's exactly when you would see asset classes including crude oil prices continue to gain.